Our property markets around Australia are falling in value, but that's not surprising considering all the challenges they're experiencing at the moment. To find out exactly what's happening, today I have a chat with Dr. Andrew Wilson and we discuss his latest September quarterly property market report. If you want to keep up to date with what's happening in our property markets, please subscribe to this YouTube channel and click the little bell icon so we can keep you informed each time a new show comes out. Boy, have our housing markets had a lot to contend with this year. Floods, a war overseas, an election back home, inflation, rising interest rates, and clearly the media keeps scaring us about our housing market's going to crash. So how are markets actually going? Well, now that we're 3/4 of the way through this calendar year, my housing market has just released its latest statistics for the September quarter, so I'm looking forward to my chat today with their chief economist, Dr. Andrew Wilson. Hi, Andrew.
G'day, Michael, and we are 3/4 of the way through the year, so we do have those September quarter house price numbers, and no surprise they are showing a continued fall in house prices. But let's remember that this is a quarterly data set. It is taken over July, August and September. It gives us, I guess, a more robust picture of the market. But the question is it as timely as we could have if we were using monthly data, or as we do in our weekly catch-ups, we use the weekly data, which is the auction clearance rates. But look, this gives us a bigger picture view of housing markets, but not necessarily telling us what's happening right here and right now. No surprise, we've seen every capital city record a fall in median house prices over the September quarter. We know that booming house prices have impact affordability. We've had a remarkable period in all capital cities, with the perhaps exception of Perth, over the past 18 months to 2 years in terms of prices growth. Affordability barriers have typically acted to sideline buyers, and we've seen early days 2022 prices starting to ease. Of course, we've then had the added impetus of higher interest rates, Michael. Of course, we haven't had an interest rate increase since 2011 up until May this year. And of course, it was, as you suggested, the subject of and continues to be the subject of some scary headlines. And that, of course, acts to sideline buyers and sellers who do become a little bit wary of the market. So no surprise, with interest rates rising consistently every month since May, Sydney has led the charge downwards again over the September quarter. Sydney's median house price down quite a steep 6.6%, Michael, over the quarter, followed by Melbourne down by 4.2% and Brisbane down 3.1%. Adelaide and Perth were down just slightly over the quarter. It's the first time since 2019, March quarter 2019, that we've seen consecutive falls in median house prices, quarterly falls in median house prices in both Melbourne and Sydney. We know that was a similar period where I guess the fear factor was impacting housing markets. But I think the important thing is, and also, it's interesting, Michael, that we can see the divergence now on annual prices growth between Melbourne and Sydney compared to Adelaide and Brisbane. Those two capitals are recording quite strong prices growth over the past year, whereas Melbourne and Sydney are now below the line in terms of comparing prices now to where they were a year ago. But again, just reinforcing that these are quarterly house price numbers. They do take a view of the market over a 3-month period. And also the data is to some degree skewed towards the first 2 months of the quarter, because we await the full data set to come through.
So, Andrew, some people are going to look at these figures, those property pessimists, and say 6.6%, 4% over a quarter. Told you so. We're going to have 20-30% property price falls. How do you see the outlook? What's happening to the rate of decline in property values?
Well, as I discussed, Michael, this tends to be a backward-looking data set. It's important because it gives us a robust picture on a quarterly basis, but we can miss out on the more real-time insights into the housing market using the quarterly data set. We know that the latest monthly house price data is actually showing an improvement in those underperformers of Melbourne and Sydney. We're certainly seeing the rate of decline over September, the month, improving compared to August. And certainly the outlook, the trend is for that improvement in the price growth declines in Melbourne and Sydney particularly. There are also other correlating measures over September that support an improving housing market outlook. We've seen auction clearance rates in Sydney and Melbourne clearly rising over the month and now hovering in those mid 60% ranges. Another correlating data set, Michael, which I think is interesting, that supports an improving market outlook is days on market. Average days on market has clearly improved in Sydney and Melbourne, with the rate of price decline easing in Sydney and Melbourne, with auction clearance rates rising and now moving into more of a balanced market environment, and days on market falling in Melbourne and Sydney. I think the outlook is clearly improving. So on the data side of the equation, Michael, we can certainly support the proposition that there is a prospect that I think the Melbourne and Sydney markets will start to bottom out when we get our December quarter data in 3 months' time.
Well, Andrew, currently the elephant in the room is the shortage of housing supply and the lack of new construction. How's it going to meet the needs of those 195,000 skilled migrants that are planned to come to Australia in this financial year? And what about all those hundreds of thousands of students coming back? Those new migrants, they rent for the first couple of years till they find their feet in Australia, and with virtually no rental accommodation for them, and our government's not being able to create supply, I suggest our governments are soon going to be forced to accept that private investing in housing is going to need to be encouraged and accelerated rather than discouraged like they're doing.
Well, that's a 180-degree turn, isn't it, Michael? Be interesting to watch that one evolve, but I think you're absolutely right. You know, we have an underlying shortage of housing. That's not improving because new dwelling approvals are continuing to, at the very best, flatline following the surge last year through Home Builder. And of course, on the demand side, we're continuing to create demand. The ABS has recently released its March quarter population data, Michael, and I think that took a few by surprise because we've certainly seen a significant rebound in international migration. Migration over the March quarter, international migration surged across the board. So we're already seeing very early signs that the flood of migrants coming back into Australia with borders now open, and of course we are a high migration country, is certainly well and truly on the way. And that, of course, as you said, will have a significant impact on housing markets, which are already undersupplied. And of course, you know, investors will take advantage of those for higher rents, and rents are continuing to go through the roof, particularly for units at the moment, Michael, which I think says it all in terms of how unaffordable houses are becoming. We've also got incentives for first home buyers as well to move into the marketplace. And I think one of the biggest incentives for first home buyers is not just government handouts, it's the fact that they want to stay away from the rental market, because that's a real horror show at the moment. So these are all the underlying factors, Michael, that validate what we're seeing early days in terms of a pickup in our housing markets, particularly Melbourne and Sydney. I think that by the time we get to the December quarter, Michael, we may start to see some clear evidence that our particularly Sydney and Melbourne markets are bottoming out. And of course, we know the big picture is interest rates, or are interest rates, Michael. And the Reserve Bank's adding, I guess, to a bit more positivity, saying that they believe that interest rates increases might not be as high as they've been recently. And we may see the peak of the interest rate cycle sooner rather than later. Now, a lot of that is up in the air, of course. We are a hostage to the international environment, and particularly inflation. But there's more positivity about inflation as well, with the price of oil falling sharply, and also the growth in house building costs starting to ease. And they've been important drivers of Australia's inflation. But we do have a lot of water to go under the bridge yet. But certainly we can be a little bit more optimistic, I think, Michael, despite those declines in quarterly house prices over the September quarter. I think that the current data is supporting not so much a revival, but certainly a steadying and perhaps a bottoming out of our housing markets, particularly the underperformers, Melbourne and Sydney, by year's end.
Well, we'll be back every week with our regular Property Insider chats to keep an eye on it. Thanks for giving us this in-between update, Andrew.
Thanks very much, Michael.